Moving on to these stories, Reserve Bank of India Governor Shaktikanta announced that the central bank's monetary policy committee has unanimously decided to keep the key rates unchanged while maintaining an accommodative stance. Well, monetary policy committee voted unanimously to keep the policy repo rate unchanged at 4%. Well, MPC has also decided to continue with the accommodative stance of monetary policy as long as necessary, at least to the current financial year and next year, he said. As of now, the repo rate currently stands at 4%, while the reverse repo rate remains unchanged at 3.35%. It may be noted that marginal standing facility rate and bank rate remains unchanged at 4.2%.
Impact of COVID-19 while ensuring that inflation remains within the target going forward. The marginal standing facility rate and the bank rate remain unchanged at 4.2%. The reverse repo rate stands unchanged at 3.35%. Let me take this opportunity to briefly review the state of the economy and its prospects. I have always dared to be an optimist, believing firmly in the ability of humankind to overcome the pandemic. In the months gone by, when COVID-19 raised in fury across the world, our hopefulness might have appeared impudent, like a flame flickering amidst a gathering storm. Today, there is a turn in the wind which suggests that it is not imprudent to dream of a brighter tomorrow, even in the bleakest of times. As Dr. APJ Abdul Kalam, our visionary former president, said, I quote, "You have to dream before your dreams can come true. A dream is not that which you see while sleeping. It is something that does not let you sleep," unquote. After the steep decline into which the global economy plunged in the second quarter of 2020, global economic activity appears to have rebounded sequentially in the third quarter, but unevenly among and within economies. Improvement in manufacturing, labor markets and retail sales powered strong recoveries in some countries, whereas in others a rise in new infections prompted a slower pace of unlocking or reimposition of restrictions, which in turn stalled the upturn. Generally, investment has remained in retrenchment, while consumption and exports have started to improve. Massive policy support across all countries has prevented a deeper downslide, providing a floor underneath employment, household incomes and businesses. Financial conditions continue to remain benign. The Indian economy is entering into a decisive phase in the fight against the pandemic. Relative to pre-COVID levels, several high-frequency indicators are pointing to the easing of contractions in various sectors of the economy and the emergence of impulses of growth. Rather than enumerating them here, I have, in the interest of time, set them out in an annex to this statement, and this statement will be uploaded immediately after I make the statement before camera. By all indications, the deep contractions of Q1 2021 are behind us. Silver linings are visible in the flattening of the active caseload curve across the country. Barring the incidence of a second wave, India stands poised to shrug off the deathly grip of the virus and renew its tryst with pre-COVID growth trajectory. In this environment, the focus must now shift from containment to revival.